Okay, so we started last video introducing the idea of Forex trading to make money. You may be asking yourself, so how do I make money? How do I do that?
This is how we do it. This is how we do it.
We are not quite ready to answer that question, though. We have to go over some more basics. So let's begin with some of the basics. When we're talking retail Forex trading, you have to start thinking in currency pairs, which is different from, say, when we were talking about in our previous series on beginner day trading, we were talking about penny stocks and things like that. We're not, you don't, you don't have your money and then you buy stock or you sell stock. You're talking about currency pairs. And so let's start with this chart that we introduced last time in TradingView, and let's focus in on this one here. So here we have EUR USD, which is the euro versus the US dollar. So we're going to go over that a little bit, but let me introduce another part. Here we have some numbers. Here we have the euro, and that the symbol on the left is called the base, is referred to as the base. Symbol on the right, the US dollar in this case, is referred to as the quote. So that's just for starters. Keep that in mind. Try to remember that. And we will, like I said, this is like the layers of an onion. We will keep digging into more of this. But right now, just remember the left is the base, the right is the quote. And then over in the other part of the chart that we magnified, that is the exchange rate between the two currencies over time. Let's focus our attention once again over here on the left side where we zoomed in. And let's talk for a second about the 4 digits that are to the right of the decimal point. Those are called pips. And so if you were to subtract one from the other, that's the 4, which is done for you. It's calculated for you. That is a difference of 4 pips. Focusing our attention back on the right at the exchange rates, and we're also talking about pips. But what is a pip? A pip is a percentage in point. So what is it that we mean? So a pip is the smallest increment of trade, and it's typically 1/100th of 1%. So if 1% is 0.01, then 1/100th of 1% is just moving the decimal over 2 places. And so that 1 is the smallest increment. So that's 1 pip right there. And we saw that in our example, there was a difference of 4 pips. And so each one of these, so for example, that's 1,260 pips. Now, if you notice though, for this chart, the exchange rate is out to 5 digits, but still it's the 4th digit that's the pip. There is some exceptions to that. Any currency pair where the Japanese yen, the JPY, is in the quote or the second listed currency of the pair, those are typically priced out to 2 or 3 decimal places. So in that case, this would be a pip. So it's actually, I guess, 1%, you could say. Okay, so we are a little closer to being able to do some trading. And just for kicks, I'm going to show you something here. So let's say that I wanted to do a trade right here. I right click, I'm in trading view, right? I click on trade, create new order, and I can do a buy or sell, but that's not the important thing right now. What I want to talk about is the quantity. So typically, there are historical lot size names. 1,000 units is a micro lot, whereas 10,000 units is a mini lot, and 100,000 units is a standard lot. Again, 1,000 units is historically a micro lot, 10,000 units is a mini lot, and 100,000 units is a standard lot. So if your account is funded in US dollars, then the 1,000 units or a micro lot is $1,000. This part shouldn't be too different from how you would think about it if you were doing penny stock day trading. So again, we were talking about US dollars and micro lots. Say you put it in order for a micro lot or 1,000 units. If the exchange rate moves 1 pip, then that's a 10-cent move because you just take 1,000 units or $1,000 of USD times the 1 pip move, and that's 10 cents. And so your your lot size determines your risk reward. Okay, we are really just about there. And if you watched the previous series on the day trading, beginner day trading, then you already know how to do some chart analysis, technical analysis, and I just showed you how to start up a trade, buy or sell, or paper trading. But I want to cover a few more little things because we want to treat our paper trading as if we were doing something with real money. So I will see you in the next video.